My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. Okay, so just to remind you, I have said repeatedly in this commentary for months and months that the most significant feature of this market has been the very significant lows of 2021 at 15,665, which led to lows in late November 23, plus the lows in 24, most recently in late October, November, early December, and so as also the congestion in January and February of this year. So I will now reprise part of my commentary, the same part of my commentary I've given here for many, many months now, and I quote, "It is this point I feel obliged once again to mention the big descending scallop pattern I had been going on about for months and months, and what it may mean within the near-term universe." So the key level had been the lows at 15,840. The significant move below this, and by that I mean you would know it when you see it, a significant break below this could give a downside potential for the descending scallop pattern down in the 13,830 zone. End of quote. 3 weeks ago I added, and I quote, "For a while I even started thinking this pattern's time had come and gone, and maybe I should retire it completely. But I didn't." Well, for you, we definitely had, as I said, a significant move, one you would recognize when you saw it, and prices dropped down like a stone, down to the 13,830 zone, for low at 13,865. All in all, it is satisfying to see such a move down to a target I've been prattling on about for many, many months, and to do it in a way that I expected it might. As for what's next, well, we have just reached the end of a huge move. I think it requires some more thought and observation to see what will be next. End of quote. So my observations a few weeks onwards are these. The levels of 15,840, and especially the low of 2021 at 15,665, are still key. And we've seen the last 3 and a bit weeks, as we've seen the last 3 and a bit weeks. 15,665 has next to it the flatlining mauve medium moving average, currently at 15,665, and the green short medium moving average, currently 15,745. Above these we have the dark blue July 24 to November 25 head and shoulders neckline, currently at 15,980, and the gold long moving average, currently at 16,045. Meanwhile, below the market, we have the 50% Fibonacci line for 2025 at 15,325. We're just below us at the moment, which acted as a base of action for the early part of the week 3 weeks ago, as well as last week, along with the newly drawn bright red middle tine, and that's currently at 15,045 of the early October 24 to mid-March 25 bearish shift pitchfork. This middle tine is still not validated as yet, but the lower tine, currently at 13,765, helped halt the fall 4 weeks ago on a closing basis, and arguably also partially on a low market basis, along with the October 2020 low at 14,040. I am now contemplating whether the action since at least March to date, and possibly as far back as November 24 to date, is a diving board pattern. A pattern that usually has a bullish recovery and reversal back upwards after a sharp drop. 2 weeks ago this looked like a good idea, but not so much now. In this action, the move until the end of March could be seen as the diving board approach. Start of April until the middle of the month is the plunge, and since the first third of April until 2 weeks ago is the recovery back upwards, or the return to the surface and the climb out the water. Nearly 9 out of 10 such patterns see a move to the base of the diving board. That's the 16,000 area. A quarter stop rising within the diving board. That would be what we may have here, be between about 16,000 to 16,780. About 2/3 of such patterns see a move higher than the initial approach onto the diving board. That's over the March high at 16,780. So right now we have seen hesitation around and just ahead of the 16,000 to 16,780 area, which raises a question mark about this pattern. It continues to be interesting to see how this pattern develops, but time is starting to run out. If we are to go down this route, as in moving higher, we need to do it soon. LME 3-month zinc. Much like LME aluminium, there has been here a number of patterns that have affected this market in recent times, all happening at the same time. The first is the thoroughly broken, but even now still refusing to die, old dark blue May to August 23 bullish shift pitchfork that subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle tines. This one still will not die. Even when I thought 4 weeks ago that it had finally expired, it is still influencing the market, especially the dark blue lower tine, which is currently at 26.34, along with the March 21 low at 26.27. I'm also starting to look with greater interest at the newly drawn bright green mid-December 24 to mid-March this year bearish Andrews pitchfork. The market is currently in between the middle tine below, currently at 25.36, and the upper tine above, currently at 27.74. Now going back a bit, the decline 6 weeks ago was prompted by the break lower below the neckline extension, currently 28.45 of the early January to early March this year reverse head and shoulders continuation pattern. So what else have we to look out for? Well, further down we have the lows in early August last year of 25.49, 25.59 and 25.63, as really important 2021 low at 25.47 that prompted those lows in the first place. So far they have seemingly been a base for this market. To this end, I've also draw your attention now to another feature, one I highlighted 4 weeks ago, and I quote, the March 2020 to date uptrend below, currently at 24.92, highlighted in purple on my daily chart. I'm not sure how good this will be, as has been finessed a number of times before, but it's still nevertheless there and ought not to be ignored. I suspect that the proximity of this uptrend also influenced the market's somewhat sideways action seen in recent weeks. Meanwhile, topside, I'd keep an eye on upon the 50% Fibonacci line for the whole March to April move at 27.55. Now this is not the whole of the 2025 action, just a major move in the last few weeks, as well as nearby the declining short medium moving average currently at 27.87 and the medium moving average currently 28.39. This last one formed 4 weeks ago a dead cross with the declining long moving average currently at 28.94. Now this is a lagging indicator, but it's still an indicator. So we are finally left with an interpretation of what the whole late March to date drop and hesitation might be. Is it a basing action for a possible future attempt higher, back up to the broken dark blue upper tine, currently at 29.64? Or is it a hesitation, a somewhat larger hesitation with potential down to the 23.10 zone? Right now it's not easy to say which, but I would keep an eye on the bright green bearish shift pitchfork to possibly give a clue in the future. LME 3-month tin. Here is a market that technical analysis worked on quite well. So as in some of the other metals I've discussed, there are a number of patterns here affecting the market all at the same time. Here, Monday 4 weeks ago, the market halted right on the broken dark blue lower tine, currently at 32.490, of the November 23 to November 24 bullish shift pitchfork, bouncing back up for a day, but then 4 Wednesdays ago, plummeting down just below the July 2011 high at 29.005. On the way down, it passed through the nearby gold long moving average, currently at 31.365, and the mauve medium moving average, currently 31.650, closing below both before turning back up again for just a day in the middle of April, before turning back down again, though not as far this time. Now, going back a bit, prices in April did also breach, but did not close below congestion between 29.880 and 30.205, as well as the bright red neckline extension, currently 29.950, of the October 23 to January 24 reverse head and shoulders bottom. However, the move up became capped early 3 weeks ago, then late 2 weeks ago, as well as early last week by the dark blue lower tine, helped by the purple neckline extension, which is currently at 32.460 of the April 24 head and shoulders continuation pattern. Interestingly, prices slipped somewhat easily above the 50% Fibonacci line of the March 22 move at 31.845, but last week had problems staying above there, dropping down to test once more the bright red neckline extension, this time aided by the newly drawn bright green lower tine, currently at 30.090 of the late November 24 to early April 25 bullish shift pitchfork. Prices both pierced and closed right on at the same time And that on both of those, and that was all she wrote on the downside as prices pushed back up again late last week over the gold long moving average and the mauve medium moving average. This all raises a question mark as to the move's topside, as they seem now capped, but also points to some significant supports below. So, for now, as I said last week, and I quote, I keep an eye on the dark blue breach lower time in case, as I said last week, so that's now 2 weeks ago, and I quote, we see the market try and run along the underside of it, which we have seen these past few days, and also keep a watchful eye on the congestion below between 29,880 to 30,205, end of quote. I should now note that in all the moves in metals, only here did we see a definitive weekly key reversal down last week, though being the only one, I have some doubts about it.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.